corporate earnings, industry trends, and market movers. Those are the conversations we're going to have on this episode of Market Pulse Weekly. My name is Frank Fagbo. Let's start with what is happening in the banking sector. Lots of results being declared. Look at the corporate world. Taking a look at the banks. The banks were the cash cow of the 2024 economy, and their results are literally coming out. And if you look at the energy sector, we're going to take a glossary review as to what is happening in the corporate world. First, we're starting with FBN Holdings. Look at their numbers. It gives you an idea as to $1 being in the news so many times in 2024. And it's reflecting in their result because FBN Holdings, a record-breaking year, we're seeing they reported a staggering 862 billion naira in pre-tax profit for 2024 and 142% year-on-year surge. Higher interest income based on their corporate result. Another reason why we're seeing lots of pre-tax profit from FBN Holdings is because of the robust non-interest income. Now, they had to diversify their income streams. Based on what we have from data, they explored other options, excluding the interest income. Now, the third on our list is a strong operational efficiency. Remember that the chairman of the bank, Femi Otedola, was very much in the news as regards restoring the faith of investors, bringing back investors' confidence into the bank because there was a lot of sanitation that went in to their operations. Many of the C-suite executives were laid off and they were trying to cut down on their costs. Remember that all of this was against the backdrop of what played out in the previous year, because there were lots of allegations around fraudulent activities that happened and they had to fix all of those. We're seeing stronger operational efficiency and it brought about investors' confidence to the bank. The next on our list is Wema Bank. Wema Bank also declared a triple-digit growth. Amazing numbers if you ask me. 134% jump in 2024. That's a whopping 102 billion naira. Now, three key reasons why Wema Bank experienced this huge growth. First on our list is the significant balance sheet expansion. Now, they expanded their balance sheet and we're seeing higher deposits and loan growth supported revenue. We're taking a look at the second reason why Wema Bank experienced this growth. The second reason is their increased digital banking transactions. Their Alert digital banking application, it exploded and they saw some decent numbers. They also improved their cost-to-income ratios. The cost efficiencies helped drive bottom line growth. The third on our list is FCMB Group. Massive growth if you ask me. Strong performance based on their earnings, 117 billion naira in pre-tax profit, and that's some 59.9% surge in their gross earnings. The three reasons why they performed so well. First is the higher net interest income, and we're seeing because of the MPR, the interest rate for 2024 was really high, up not the 27%, and a lot of banks took advantage of the high interest rate and they made a truckload of money. The strong non-interest income growth was also another reason. The bank leveraged increased transaction volumes. And then we saw a lot of banks having a lot to do with their operational resilience, effective risk management, and cost control strategies that played a huge role in their earnings report. The banking sector is clearly riding a strong wave of profitability. But can this momentum continue amidst the regulatory challenges and the economic headwinds that we're experiencing in the sector? Now let's shift gears to the energy sector. The oil and gas companies have been declaring profit, strong performance if you ask me. 2024 was a great year for energy, especially for most of these companies listed on the floor of the NGX. Remember that the NGX also had a new listing. Aradel Holdings got listed in 2024. And so the energy sector was one that witnessed a lot of transformation in 2024. We're shifting gears to that sector. The oil and gas companies have posted a significant profit growth, largely due to strong sales and market dynamics. Let's break it down. TotalEnergies is the first on our list. The trillion naira milestones TotalEnergies got listed among a SWOT categories, that's SWOT stocks that are worth over 1 trillion naira. They got welcomed into that SWOT category in 2024. TotalEnergies, a trillion naira milestone. They reported a remarkable 140% surge in a full year of 2024 pre-tax profits, grossing a 1 trillion naira revenue mark. Here's what drove their numbers. We're seeing that first is higher crude prices. In 2024, the company benefited from the favorable market conditions. The price of crude hovered around 74, 75. As a matter of fact, at some point in time in 2024, we saw the price of crude oil, go beyond our oil benchmark. And that was an opportunity for many of the oil companies to make a decent earnings from oil. Strong downstream sales as well. The demand for fuel drove their numbers. That's why we're seeing this strong performance and then operational efficiencies. A lot of the companies declaring their profit had a lot doing with operations. If you can't fix your operations, then how do you declare profit? That's why we're seeing so many investors smiling to the bank, because a lot of these companies had to cut down on their cost. FX was one of those. Energy was also one of those. Let's take a look at the second result coming from the energy sector. MRS Oil Nigeria. Now, a lot happened in the oil and gas sector. Remember MRS, the synergy between MRS and Dangote, and that brought about their sales. A lot happened, brought about 63% jump in pre-tax profit of 2024. Higher petroleum product sales was one of the major reasons why we saw a 63% jump in their pre-tax profit. Because of the synergy between MRS and Dangote, we saw that they had higher petroleum product sales, and that reflected in their bottom line. And that's why we're seeing all of this playing out in the marketplace. Better cost management. Operational efficiency also played out in the market. That's why we're seeing lots of profitability from MRS. Market resilience is also one of those. The markets navigated industry challenges effectively. The oil and gas companies have capitalized on favorable market conditions, but with oil prices remaining volatile and regulatory policies evolving. Sustaining this level of profitability will be one question that a lot of investors are going to be asking this company. How sustainable can it be going into 2025? Because there are lots of uncertainties. Trump is in the picture, and then we need to make sure that the oil and gas sector will be able to withstand the shock that the policies flipping across that sector. And remember, there are speculations around the fact that the price of oil might dwindle in 2025. All of this, we're definitely going to keep you abreast as to how this sector unfolds. Let's shift gears a little bit into some of the global headlines and market polls. Kicking off with some of the major shakeup in the global finance. What happens when one of the world's biggest banks decide to step away from Wall Street? The HSBC is making a high-stake pivot, shutting down with merger and acquisition and equity capital markets operations in Europe and America to double down on Asia and the Middle East. HSBC is moving to some markets. Why the shift? The numbers tell the story. HSBC's investment banking business in the West contributed 0.3% of their total revenue. And that's why you're seeing them shifting gears to some other markets. Meanwhile, Asia, particularly China and India, as well as UAE, all these markets are booming, offering far more lucrative opportunities, and you want to focus on where the money is, and that's why HSBC is making this move. This isn't just about chasing profits. It's a survival play. With economic slowdowns and facing geopolitical tensions, remember the economic war between the US and China, and definitely you don't want to be caught in the web of all of those interplay, and that's why you're seeing HSBC moving to Asian market and the Middle East. How is the market reacting to this? HSBC stocks fell initially by 1.2% on the announcement, but confidence quickly returned. Investors recognized the long-term growth potential. Now, could this move secure HSBC's place in the next financial super cycle? Or is this move leaving too much on the table? We're definitely going to find out. I'll keep you abreast with some of this information. Some of the key figures: 0.3% growth, HSBC investment banking revenue from Europe and the Americas, and then 1.2%. HSBC stock dipped by 1.2% following the restructuring announcement. What do you think about some of this move? Go to our comment section and let's hear from you. What are your thoughts regarding HSBC leaving the US market and Europe and going to Asia and the Middle East? Now let's shift gears a little bit to the tech ecosystem. Now imagine waking up to find out that a Chinese AI startup just erased $465 billion from the market. And that's what happened overnight when DeepSeek AI launched its free open source AI model, instantly rattling Wall Street and Silicon Valley. Nvidia suffered a record-breaking 13% drop in one single day, wiping out $465 billion in market value, and that's the largest one-day loss in the US stock market history. Other tech giants, the likes of Microsoft, Meta, Alphabet, that's the parent company for Google, also saw steep decline as investors grapple to reassess the AI playing field. And this is the disruption that China is bringing into the artificial intelligence industry. Why the panic? DeepSeek open source model is a direct challenger to OpenAI. It's a battle of who's going to conquer the artificial intelligence market. And the funny thing is that DeepSeek built this platform with less than $6 million. Now imagine just supposing that with OpenAI, hundreds of billions of dollars funding that has gone into just building the OpenAI platform. And that's why a lot of investors with DeepSeek's innovation and platform that came into the playing field. Now, who do you think is going to win this battle? China or the US? A lot of this would unfold and will keep you abreast. Let's dive into the NGX Market Wrap. What happened throughout the week as regards the Nigerian equities market. On Monday, the 27th of January 2025, we're seeing that the NGX All Share Index closed at 104,418.95 points, up by 0.79% gains. The market capitalization closed at 64.44 trillion naira. Total gainers, Better Glass, RT Briscoe, and Access Corporation, they all had 9.9% gains and 9.92% gains, as well as 9.88% gains, respectively. Top losers were MRS, 10% loss in the market. Transcorp Hotel, 9.97% decline in the market as well. On Tuesday, we saw the market performance, that's the all-share index, drop to 103,958.75 points. It was down by 0.44% loss in the market. Market capitalization also dropped to 64.15 trillion naira. Some of the top gainers as at Tuesday were seeing Scout 10% gain, Okomu Oil 10% gains in the market, and Unicel also witnessed some 10% gains. Some of the top losers, MRS 9.95% decline in the market, Red Star X 9.90% decline. On Wednesday, 29th of January 2025, the market performed, the all-share index rose to 104,549. That's 0.57% gains in the market. The market capitalization, 64.52 trillion naira. Now, some of the top gainers as at Wednesday, Aradel featured among the top gainers, 10% gains. Celeram also 9.9% gains, and then Stanbic 9.92% gains. The top losers, Keverton featured amongst the top losers, dropping by 10%, and then McNichols 10% decline in the market. On Thursday, the 30th of January, we saw that the all-share index increased to 104,744.43%. It went up by 0.19% gains in the market. Market capitalization also rose to 64.86 trillion naira. Some of the top gainers, Celeram, 10% gains in the market. Honeywell Flour also featured among the top gainers by 10%. NNFM, 9.98% gains in the market. And then the top losers, Guinea Insurance, 10% decline in the market. RT Briscoe featured among the top losers, 9.98% 7% decline in the market. The final trading day was the market performance. The all-share index dropped to 104,496.12 points, reflecting a 0.24% decline in the market. Market capitalization 64.70 trillion naira. The top gainers: Better Glass 10% gains, Vitafoam 9.98% gains, and then NNFM was seeing 9.98% gains in the market. Then the top losers: Owando 10% decline in the market, Stanbic 9.94% decline, and Ikeja Hotels 9.84% decline in the market. Some of the market trends: strong performance in industrial and banking sector boosted the midweek momentum, and then earnings result drove the positive investor sentiment, while oil and gas stocks saw some decline. And that's it on this episode of Market Pulse, where we break down some of the top stories around corporate earnings, industry trends, and market movers. Every week, we have these conversations on Nairametrics TV. My name is Frank Fagbo. Make sure you stay profitable. Cheers.